When you can actually see your profit for the year in dollars and cents, it gets you more in the notion of selling corn, knowing that I can lock in a $50,000 profit or whatever the profit is. You want to lock it in. If I know I can make that much profit in a year, I will be in business next year.
Good afternoon. Welcome to GrainTV. My name is Cody Bills. Today is September 4th. It's a Friday for the weekly wrap-up. Let's turn over to the Grain Hedge trading platform and see where we closed off the day. Corn trading up a penny, soybeans down 3 1/4 cents, and wheat in Chicago here moving a little higher here, up 2 3/4 to $4.68 on the December contract. Keep in mind that next Friday we will have the crop production and supply and demand report out. That is likely to add some volatility into the market. Keep in mind that after the August report, we had a significant bearish sell-off here as a result of surprising yield estimates that were much higher than expectations, bringing ending stocks to an area that really wasn't even within the range of analyst guesses. So in general here, people are wondering whether or not those yield estimates are going to stay lofty or if they could be moved down slightly after a month of growing conditions. Also, the following Tuesday, we'll have the NOPA crush numbers, so those will also be important. Monday, the grain markets are closed. They will be reopening Monday evening at 7 p.m. Central Standard Time for the evening session of Tuesday. And so my feeling here, I'm a little bit, I guess I'd be cautious going into next week. We have this long weekend. China has finally gotten past their large military parade, their 70-year victory over Japan anniversary here. And so my concern is, will we start to see volatility enter the markets in China now that that event is behind us? And that is a big question mark. But if it does, it certainly has very widespread effects across the globe, as we saw last Monday when there was a significant sell-off due to China's stock market falling nearly 8% there in one day. So that's, I guess, a big question mark for me going into this week or going into the long weekend. It's something I'm going to be paying close attention to in the overnight session there on Monday. Let's take a quick look at the charts because I wanted to show you just kind of where we left off the week. You'll notice that soybeans is kind of cupping over on the lows that we printed there on August 12th. You'll also notice, or excuse me, not necessarily August 12th. We actually dropped down there, but it was late in August. We printed those lows. I think we're going to cut back over on them, likely test them, most likely break through them. And so that's my overall opinion here for soybeans. I see private analysts coming in mostly in line with USDA estimates. Pro Farmer was mostly in line with the USDA estimates. It looks as though the growing conditions are still strong. Looks as though we're going to get precipitation Sunday evening through Tuesday. Very, very intense precipitation. That should help alleviate any dryness that we've seen. But in general here, I don't see any major reasons for soybeans or corn to rally here in the coming weeks. But as soon as we start to see the combines start rolling, then you have the question mark: will we see reports from farmers throughout the Midwest? Will we see positive or negative reports? And so then I would start to be nervous that maybe we could get some sort of a rally here as we've factored in a very substantial crop. So I guess what I'm thinking is next week we need to be concerned. We'll probably be pressuring the low side of the range. They're probably breaking new lows, but then you're going to want to be cautious as we move into mid-September when combines start rolling and producers start picking their best corn there, and we'll get some sort of results that will most likely move the market or either confirm the large yield that is expected, or it'll start refuting it and providing some physical evidence behind it. When you look at corn, you'll notice the daily chart, we're also cupping back over. My feeling on this is that it is very likely that we break through these lows of 357.5 I think there's a lot of corn out there. At least right now, there's no major pieces of news to cause a short covering rally. Weather seems to be positive. Everything seems to be positive here going forward. We'll have to see if next Friday's report provides a reason to start covering some shorts, but I do believe we'll be pressuring these lows here in the next week. When you look at the yield forecast for the next WASDE report, here's where the private analysts sit. Basically, in August, we did see the USDA with 168.8 bushels per acre in the August report. It's likely they're going to revise that. What we've seen is Planalytics, they're sitting right at 166.8. We're seeing Pro Farmer, which is a different perspective. They actually had scouts checking, counting kernels, counting ears. In general, their estimate is 164.3. We saw Informa come out and they kind of they rebutted that 168.8 yield that we saw from the USDA, and FC Stone is sitting at 165.9. My expectation going into this report, we will probably move yield down slightly, but I wouldn't expect to see a large yield revision here. We may come from 168.8 down to 168 or 166.8, somewhere in that range. That's where I'm suggesting that we may see a revision. We'll have to see, though, because it looks as though there's a wide range between third parties and where they expect the USDA to go with their yield here in the September report. For soybeans, it looks as though for the most part the USDA is on the high side of expectations. Informa was a little bit higher there. They were mostly in line with the USDA. 46 bushels per acre. FC Stone has the lowest at 45.4 bushels per acre. So we are going to want to pay attention to it, but I wouldn't expect to see too much of a revision here from the soybean crop. It seems as though most analysts are coming in, for the most part, in line with the USDA estimate back in August. This is a Friday. Let's talk a little bit about the cash market. You'll notice cash basis for corn did improve 2 cents on the week. We saw a strong improvement from ethanol as a sector there, up 3 cents on the week on average. We did see an increase in barge rates, and that helped, and that hurt river markets. We did see basis on average across river terminals down 6 cents on the week for corn, mostly as a result of rising barge rates as we get closer toward harvest. When you look at soybeans, what we started seeing is spot soybeans getting cheaper here, more in line with new crop soybean prices. Soybean basis dropped 17 cents this week. Spot soybean basis fell very sharply at a 30-cent premium at the end of the week. Last week we were at a 48-cent premium on average with spot over new crop. So we're starting to see new crop and spot prices come more in line here with each other. Unfortunately, we also saw basis at crush facilities down 23 cents this week, and river terminals down 11 cents a bushel this week. So in general, we are seeing basis topple over here for soybeans. A bit disappointing, but we are at the end of the marketing year, moving into new crop, and that typically does happen. So guys, that wraps up today's show. If you have any questions about what we talk about today, please give the office a call. The number is 877-472-4607. And if you haven't done so already, take a demo of that 14-day free trial. See what it's like to have live quotes in the palm of your hand or on your desktop. It's a great tool for producers out there looking to be able to capture opportunities intraday. When prices move, you'll be there to be able to capture any or put on any positions that you need. So thanks a lot for tuning in. If you want to take that 14-day free trial, I'd be happy to spend some personal one-on-one time kind of showing you through the platform, making sure you get the most out of those 14 days. Thanks a lot for tuning in. Have a safe weekend. We'll see you here on Tuesday.